This financial literacy video is brought to you by Young Kings and Queens in partnership with Comerica Bank.
Hello, everyone. Welcome to our first financial literacy session. This is a series of 8 different sessions, I believe, that will be taking place on Tuesday from 6 to 7. We are super excited to offer this to the community and hope that you get something out of it. Feel free to ask questions in the comment section. And I think that's about it. Our instructor, facilitator for the evening is Mr. Joe Kaiser. He is supported by our other facilitator for this program, Mike. I always mess up his last name, so I'm not. But I'm going to be passing this off to them so that they can get you informed. Our first session is banking basics. Enjoy.
Hello, good evening. I'm going to attempt to share my screen here.
In 2 seconds.
Almost. In 2 seconds. But while we wait for that, Takesha, thank you for that great intro. My name's Joe Kaiser. I work at Old National Bank, which is a bank here in Kalamazoo, Michigan. My job at the bank is called Community Outreach Officer. So it's my job to partner with nonprofits like Young Kings and Queens and to teach financial literacy, which is what we're going to do today. And I'm going to try Mike DeMartelaere.
Great job, Joe. You hit it right on the head. But Mike D for everybody else because it's much easier.
Fair. And thank you for being here with us tonight too, from Comerica Bank.
Thanks. And just so everybody knows, next week, Comerica Bank, External Affairs Market Manager. So I do the same thing Joe does, working with nonprofits, bringing financial literacy to a lot of folks in our markets. So I want to thank everybody for joining us this evening, and I'm going to turn it over to Joe because he's facilitating, and I am just going to be watching. And in a couple weeks, it will be me, and Joe may be watching if he has an opportunity. So take it away, Joe.
Thanks, Mike. Yeah, I think it's worth a mention that, it's interesting when banks cooperate on things, and financial literacy is one of the things that we absolutely do cooperate on. Mike and I met each other a few years ago as part of a Southwest Michigan CRA association. So it's a group of banks. We get together monthly and we talk about what's going on in the community and ways we can partner to help the community like this. So financial literacy. Tonight, we're going to talk about banking basics. So very, very basic things about banking. And when I say banking, I also mean credit unioning. So for lack of a better term, we'll say financial institutions. So I'd say for the purpose of this session tonight, when I say bank or credit union, I mean essentially the same thing, a place that keeps your money safe. Financial literacy, I wanted to spend a second defining that because I think that's also important. So, just like being literate in the English language, that means, that we're able to read books and understand the information that is contained within the pages. It's a way to transfer knowledge from the author to us. And I think financial literacy is very much the same thing. It's being able to understand the concepts of managing finances in our country, using our financial system to your advantage, knowing financial terms so that you can, again, use those to your advantage, but also maybe even more importantly, so that you can avoid being taken advantage of, because there are a lot of, I call them predatory financial institutions that try to take advantage of folks who are not financially literate. So that's why I think financial literacy is important. And I think you've invested your time wisely if you are watching this either live or as a recording. Takesha mentioned that we have the option to take questions. So please type questions away either on Facebook or here on Zoom. Also, if you have any follow-up questions, there's my contact info. Give me a call, email, text, anything. Bankers are generally friendly people. Okay, so let's get into it. What do banks do? Well, banks do several things. If we were live in person, I'd ask you to shout it out. So let's go through some common answers that I hear when I ask the question, what do banks do? Banks offer a safe and insured place to keep your money. Insured is important. When you put your money in a bank or a credit union, your money is insured up to a certain dollar amount. For the purpose of tonight, we'll say that dollar amount is $250,000. So when you put your money into a bank, you are guaranteed by our government to get that money back out. That is an advantage over the bank of your house or keeping your money under your mattress. While that may be safe because it's close to you, it is not insured. So if that money is stolen or if your home burns down or something like that, that money is gone. Whereas if those things happen to the bank, you're insured. You're insured by the FDIC for banks and the NCUA for credit unions. Banks, number two, they use the deposits that we as consumers deposit in banks to make loans. So bullet point 2 here is essentially the whole business model of a bank. A bank wants to pay you, consumers, me, I'm a consumer too. A bank wants to pay us consumers interest, a certain amount of money for the privilege of keeping our money safe. Say for the purpose of this class, the interest rate that a bank wants to pay me is 1%. In today's market, that would be pretty good interest actually. So say I wanted to save $100 in a bank at 1%. That means every year I will earn $1 of interest from the bank. It's pretty cool. Now, in addition to the privilege of keeping that money safe, the bank wants to do more with that money. The bank wants to loan that money out. That's really how the bank makes profit. So say I also need a loan. Say I need to buy a car for also $100, just to keep the example easy. The bank will ask some questions about me, maybe pull my credit. We'll talk about credit next week, by the way. And then the bank says, okay, Joe, sure, we will loan you $100 so that you can buy that car. Now, in exchange, we are going to charge you interest. And the interest we're going to charge you is 3%. So for every $100, or for that $100 that you borrow from us, you are going to pay us $3 per year for the convenience of borrowing that money and having that car now, as opposed to in the future if I were to save for it. So the bank in this example has paid one consumer 1% or $1 in order to obtain money or obtain deposits, while another customer, me, has paid the bank $3 to borrow that same money. And so the difference there, 3 minus 1 is 2. That 2 is the profit for the bank, or the revenue. That's the money that the bank uses to pay its employees, keep its lights on, pay for snow plowing, everything like that. This is where I would typically ask, does that make sense? Because that sure makes sense to me, but hopefully it makes sense to you too. That essentially is the business model of a bank or a credit union. Everything else is kind of just decoration. So we mentioned, oh, Takesha, yes.
It's me who has the question.
All right.
So when you say that the savings, is this a typical checking or savings account that we're talking about with 1%?
Wonderful question. I'd be talking about a savings account. So there are many different types of accounts at a bank or a credit union, but the main two types of accounts are checking and savings. Checking accounts are accounts that, for the most part, don't pay any interest. However, they allow me to operate my life. That's where I usually pay my bills from. So that's if I have checks and I write checks for bills, they come out of my checking account. If I have a debit card and I'm swiping my debit card at the grocery store, that's coming out of my checking account. My checking account is meant to have a lot of transactions going on. In general, banks and credit unions don't pay interest on a checking account, or much interest. Now, the other type of account is a savings account, and that's the type of account that I was describing earlier, where a bank would pay you interest. 1% right now is a lot of interest, or it is considered a lot of interest. I think the national average is like 0.1%, actually. Takesha, does that make sense?
It makes sense to make, especially on the savings side, to make some level of interest off of your money. It's just kind of low, but I guess it
Yeah,
makes
it
sense
is.
on a national average in regards to a bank versus other accounts, which we're not going to talk about today, right? It's just bank.
Oh, we can certainly talk about that. So part of being financially literate is being able to navigate the market and shop for deals. So yeah, I think what you're alluding to is you can get more than 0.1% or 1%. Sometimes you might even hear an ad for 4% interest. So part of being financially literate is being able to vet those deals, or being able to read the fine print. So oftentimes, if you hear of an interest rate that is significantly higher than the national average, there's usually some hoops to jump through, or some strings attached, or some fine print. That's not to say it's not worthwhile to participate in those promotions. So oftentimes you might see 4% interest offered, but the fine print might say you can't deposit more than $10,000, but you also have to maintain a minimum balance of $2,000. And that's the fine print, or the hoops, if you will, that are often present. Again, not all fine print is designed to trick us. You know, fine print is just that, it's the details. Banks and credit unions want to attract our attention with interest rates that they know are attractive to us, both on the lending side by having a low interest rate, and on the savings side by having a high interest rate. But we need to use our financial literacy to make sure we understand the fine print. What do you think of that, Takesha?
That was perfect. Thank you.
Cool. Okay, so I think we covered the first 4 bullet points on this slide of what do banks do. We talked about the basic business model of a bank, taking in deposits, paying some interest, lending out that money, collecting more interest. That's essentially what a bank does. Banks and credit unions, again, are also called financial institutions. Now, in addition to that, financial institutions also offer a lot of services that make, I'll say, modern life possible, like credit cards or debit cards, online banking, so the ability to check our balances, move our money around, pay our bills online. That's all considered standard financial services nowadays. The ability to offer us car loans, home loans, and the ability to help us save for retirement. Okay, why should you keep your money in a bank? Safety is my number one. Again, some places, you know, that I've heard clients keep their money maybe in a coffee can buried in the backyard, under their mattress, even in a safe in your house. It does offer you the peace of mind of keeping your money with you. However, if anything were to happen to that money, you have no recourse. So if that money in the coffee can gets dirty and destroyed, or dug up by a squirrel, it's gone forever. If your house burns down, that money in the safe may be gone as well. Convenience. So I mentioned the convenience of modern life, like swiping a debit card. That's really convenient. That's something that if you're younger, seems really natural. However, I can tell you, maybe 20 or 30 years ago, if you were waiting in line at the grocery store, you'd have to wait while people wrote out checks. That was considered convenient 30 years ago. And that was something that people's banks and credit unions allowed them to do, the convenience of, writing a check, which then evolved into the convenience of just swiping a debit card to have money come out. That's really convenient. It's convenient to be able to go to an ATM or an automated teller machine and withdraw cash. That's really convenient. It's convenient to be able to go onto an online website like Amazon and buy something tonight and have it delivered tomorrow. It's my financial institution that makes that transaction possible. Lower cost to keep your money in the bank. Yes, certainly. And so what we're getting at there is it can be expensive to not have to not have access to the services that banks and credit unions provide. So think about what we just talked about with convenience. So if you were to use cash for all of the things that you need to do, it's actually going to cost more money. So imagine going to Meijer and checking out at the grocery store, and you've received a paper check for your paycheck. You have to cash that somewhere. If you don't have a financial institution account or a bank or a credit union to cash that at, they're going to charge you a fee. Oftentimes it's a flat fee, sometimes it's a percentage of your check. So right there, it's very expensive. But then every time you want to interact and pay someone, you have to do things like buy money orders, buy cashier's checks, things like that. That really adds up fast. So that's what I meant by lower cost. Security, we've already touched on security, the security of keeping your money safe and insured. Also the security of transactions. So banks offer certain guarantees if you were to ever experience fraud or identity theft. Oh, someone is waiting in the waiting room. I'm going to let them in. Your bank or your credit union can help you navigate through that. And then the last two, I think, go together, your financial future and knowledgeable advice. So this is something that not everyone who has an account at a bank or a credit union utilizes. But I'd like to take this time tonight to encourage you to have a relationship with wherever or whomever you bank with, be it that a bank or a credit union. They would love to get to know you. They should know what your financial goals are for the future. Are you looking to buy a house? Are you looking to save for a car, a vacation, retirement especially? When you have an account at an institution, those folks will get to know you and you will get to know the people that work there. Just like you know your doctor, or you should have a relationship with your doctor. I encourage you to have a relationship with your banker. It's free. And we're generally pretty nice people. Okay, let's talk about different types of financial institutions. There are banks and there are credit unions. I would say those are the main two types of financial institutions you will see walking around Kalamazoo, Michigan. For the purpose of tonight, I will say banks are owned by either private citizens or shareholders. The bank that I work at, the bank that Mike works at, they're both public institutions that are owned by shareholders. So the stocks of our banks are traded on the stock exchange, either the NASDAQ or the New York Stock Exchange, probably. Credit unions, on the other hand, are owned by members. Sometimes when you open an account at a credit union, they call it a share. a share account. And what that means is when you deposit the minimum amount in a credit union, usually between $5 and $25, you own a share of the credit union. And so oftentimes credit unions call their clients members, whereas banks oftentimes call their clients customers or clients. That's generally the difference. If you have any other deeper questions about that, let me know. Type it in the chat wherever you are viewing this. Other types of financial institutions, stock brokerage firms like Charles Schwab, TD Ameritrade. Actually, those are the same now. Scottrade, anything like that. Insurance companies. So there are some insurance companies who also offer financial products like annuities or retirement. Retailers like Walmart. So this is going back to that example that I talked about on the previous slide about how not having a bank or a credit union account can be expensive. If you don't have one of those types of accounts, you're often going to be doing your banking at a retailer like Walmart. So if you think of Walmart, they have like a money service counter that you can go to, and they'll charge you a certain fee for cashing a check, and then they can also get money orders for you for a certain fee, things like that. They can also wire money. Those are all things that banks and credit unions can do, oftentimes for much cheaper. And then lastly, payday lenders. So payday lenders, I will call them out by name here. The Cash Store is one that's here in Kalamazoo. These are types of stores where you go in and they will give you an advance on your paycheck. So you might go in like today on Tuesday to the Cash Store and say, or Check and Go, that's another one. You go in there and say, hey, I have a job, and you often have to prove that you have a job, but I need money now and I don't get paid till Friday. They will confirm that I have a job and then give me money, well, lend me money, but at a very high interest rate. Like the interest rate, they generally won't even disclose it to you. It's just a very high fee. And then the idea is I'll bring my actual check to them on Friday. Now, the problem there is that's going to be by far the most expensive way you can do your banking. And it also, what I've seen from many years in my banking career is people tend to get stuck in a cycle there with these payday lenders. And so oftentimes if I borrow once on a Tuesday, I'm going to have to start borrowing often on a Tuesday. And then it may become every Tuesday. And then it's a really vicious cycle that gets hard to get out of. This is one of those types of institutions that I call a predatory financial institution. I think they take advantage of folks who don't know exactly how much that's costing. Okay. Again, let us know if you have any questions. Just checking the time. Okay. So let's talk some specifics. We as consumers, we get to pick, we get to vote with our dollars. Where do we want to do our banking? Do we want to do a bank or do we want to do a credit union? Here are some questions that you should ask yourself. What services does it offer? So for example, is online banking important to you? If it is, maybe you want to check out this bank's online banking to see if it's tech savvy enough for you. Does it have all the bells and whistles that you're looking for? Or is that not at all important to you? And it's more important that the bank or credit union has an office near your home. That's kind of an easy one. You can drive around or walk around and see there. Where are its ATMs? That's also important. Does this financial institution partner with an ATM network? Most banks and credit unions do have a network that's free beyond just its own network of ATMs. What are the fees for different types of accounts? I would say, Mike, I'll go out on a limb and say most financial institutions offer some type of free account. Shaking his head. Okay, good, good. So this is where I'd like to say, you know, if you have a bank account for your checking account, for the most part, that should be free. You really should not be paying fees. If there are fees associated with an account, there are often times or ways to negate those fees or to get around those fees. Usually that's by either having a direct deposit into that type of account or maintaining a certain balance. But again, going back to reading the fine print about certain types of accounts and promos, it's up to us to be financially literate, to know the types of accounts that we're getting into and how to avoid those fees, and to make sure that we're always avoiding those fees. Something that's happened to me before is I have sprung for those high interest accounts. Maybe like back in the day, there was a 3% money market savings account that got my attention. The catch there was I had to maintain $5,000. Well, I had $5,000 at one time, but not for very long. And so when I fell below that minimum balance, I started getting fees. So even though I was earning that 3% still, I was being charged, I think it was $9 every month. And I was definitely not making anywhere near that in interest. At the end of the day, that's my fault for not remembering that I need to maintain a minimum balance in there. Now, going back a little bit though, this is where having a relationship with your bank comes into play. So a good banker, any good banker worth their salt, also wants you to avoid paying fees. So a good banker would have noticed that I'm probably not in the right account and offered to change that for me. So that's another reason that I encourage you to have a relationship with the place you bank. And then lastly, is it insured by the FDIC or NCUA? Remember, that's the FDIC of the credit union world. Your financial institution absolutely should be insured by one of those two institutions. Okay, here are some common terms. So again, this is part of financial literacy, right? So expanding our vocabulary to include some finance industry terms. We've already talked about interest rate a lot tonight. Deposit. So when we say deposit, we mean to put money in the bank. Withdrawal, we mean take money out of the bank. Your balance. Your balance is how much money you have left in the bank. Fees are money charged for services. And then to overdraft, or overdraft means withdrawing more money than you have in your account. A note about fees. So there are some fees that you can expect to pay no matter what you're doing. I'd say like sending a wire. Sending a wire is a pretty common fee that's pretty universal, and I would imagine would be charged at most financial institutions. Exchanging money from one currency, maybe a foreign currency, to another, oftentimes has a fee that can't be avoided. But then other fees, like monthly account fees, almost always can be avoided somehow. And then overdraft fees. Overdraft fees make me sad. This is when you write a check or make a debit, and oftentimes, especially when you write a check, here's the thing about checks. If I were to write Mike a check today for $5, my bank would have no idea that I wrote Mike that check for $5 until Mike takes that to his bank and makes a deposit, item 1 up there. And then that bank goes through the banking system and clears, that's the term for it, clears my account. If I wrote Mike that check today and he deposited it tomorrow, that check may not clear my account until Friday. So I would have from Tuesday to Friday to lose track of the fact that I wrote that check and accidentally take that money out of my bank account. If I did that and that check came through and I didn't have $5 in my account, that could cause an overdraft in my account. Now, overdraft fees can sometimes be like $35 or more or less. I don't know what the current national average is, but I think it's around $35. Although there's some news about overdraft fees that you should Google. Maybe it might be changing. Anyway, in that situation, I've seen clients who bounce one check and often, let's talk about that term, bounce. So in that case there, that $5 check that came through that I wrote out to Mike, if that were to come through and I don't have the money in my account, I would be charged an overdraft fee. And sometimes the term used for that is called bouncing a check. I guess that's more of an old term, but you may hear that. NSF check is also another term, stands for non-sufficient funds. Like all industries, there are a lot of acronyms in banking. Okay. Let's move on here. Okay, documents you might need to open an account. In general, I say you probably need 2 pieces of ID at most banks or credit unions to open an account. Oftentimes that needs to be a photo ID, one of them usually, which could include a state issued ID card, a driver's license, a passport. In Kalamazoo, we've got a Kalamazoo County ID. My bank takes that probably. Yeah, it'll vary a little bit from bank to bank and credit union to credit union, but for the most part, you'll need one type of photo ID. And then you'll need either a social security number or an ITIN, usually. What does ITIN stand for, Mike?
I'll let you answer that, Joe, because right off the top of my head, it's usually for an individual who's not assigned a social security number based on being a resident alien within the United States, typically.
Yes. I would say individual tax identification number.
My explanation is much larger, as you can see.
And more valuable. Good job. Thank you.
I didn't know I was getting quizzed.
Well, I wanted to make sure everybody's awake. We haven't got a lot of questions, but.
Thanks, Joe. I'll remember this.
So Takesha asked a question earlier, alluding to different types of accounts, and I attempted to define these earlier. In general, there's 2 types of accounts: checking accounts and savings accounts. Checking accounts are generally accounts that are used to write checks to pay bills or buy goods and services. And when I say write checks, I also mean your ATM and your debit card. That's generally what you use a checking account for. You would, most folks have, I would say, a large portion, if not the entire portion of their paycheck direct deposited into a checking account. Now, I would always encourage you to split off some of your direct deposit into a savings account. A savings account earns more money on your deposits. And I would say usually that you could change more to some, because I would say almost always checking accounts don't pay interest unless you've got one that pays a higher minimum balance or has a high minimum balance. But a savings account will pay you money and will pay you interest on your deposits. Typically, you usually only use the money on things that you save for. Most savings accounts have a limit to the number of times you can withdraw from them per month. It's very common to have a fee if you withdraw from your savings account too much. Banks and credit unions and the federal government want you to use your savings account to save. Now, that said, you can link your savings account to your checking account to use as overdraft protection at most financial institutions. So, for example, going back to that $5 check that I wrote Mike, if that came through on my account Friday and I only had $2 in there, but I had $20 in my savings account, and I had an overdraft protection agreement with my financial institution, they might transfer that money from my savings to my checking. Now, sometimes they will charge you a fee to do that. So that's, again, part of being financially literate is I want to understand how my accounts function. So maybe I've got a type of account that doesn't charge me any fee for that overdraft protection or that transfer. So I don't really sweat it when I write Mike a check for $5. Or maybe I've got a type of account that charges me $10 for every overdraft transfer they have to do. So then I'd be paying Mike 3 times as much. That's not correct because he does not get that money. The bank gets the money. Okay, so hopefully we understand the difference between checking accounts and savings accounts. You will always see or often see variations of these 2 types of accounts. Usually those are designed for marketing purposes, to make a type of account more attractive to get the consumer to do something. So you'll often see a type of a savings account, maybe they'll call it a money market account. Those are pretty common, that has a higher interest rate, but it also requires you to have a higher minimum balance. So maybe it says, we'll pay you 5%, but you need to keep $3,000 in here. Okay, other types of banking services. Direct deposit, I touched on that briefly. Let me define that a little better. Your paycheck. So when we receive income, whether that be from working a job or from Social Security or from a pension or for generally any type of organization that wants to pay us, oftentimes in the year 2022 will pay us electronically. We call that direct deposit. In the old days, we used to get a paycheck, a check in the mail from Social Security once a month, or a paper check from our job every other Friday, or whatever payday was. And we'd have to actually physically take that to the bank. Well, in the 80s, direct deposit started to be a thing. And instead of giving workers paychecks or giving Social Security recipients paper checks, things started happening electronically. It's very convenient, much more convenient than a paper check for many reasons. It can't be lost. For the most part, it can't be lost, can't be stolen, and it goes in much faster than I can make a trip to the bank or the credit union. Another very important feature of direct deposit is it allows us as consumers to automate our saving. I think that's the most important part of direct deposit. We can all get fired up about saving maybe once a year or twice a year, but the key to saving is consistency. The key to saving money is doing it week after week after week. And I don't know about you, but I kind of lose interest in things every now and then. So it really helps me to automate certain things. And nothing changed my life more than automating my savings. So now with my direct deposit, when I get paid every 2 weeks, I have a certain percentage. You could also have a certain dollar amount, like $5 every 2 weeks, maybe 10% of your check every 2 weeks splits off and goes into your savings account, or goes into your 401k or an IRA. That's kind of beyond the scope of tonight, but you can have a lot of different automatic things happen with your paycheck. And it's those automatic things happening week after week, year after year, that will build your savings. Money orders. Money orders, we've touched on those briefly. Those are like checks that you pay for, and they can't bounce for the most part. So they're very common to buy at a bank or a credit union or at Walmart. So here's an example of why you might need a money order. say you don't have any bank or credit union accounts and you get your paycheck, but you need to pay rent. Your landlord only accepts cash or check. You don't want to take cash over there. So you go to Walmart and ask for a money order for your rent of, we'll say, $500. So you will then get a money order, which looks like a printed check. And Walmart is guaranteeing that that money will be there. And so it'll say $500 on it. So then you can give the money order over to your landlord. Now, for the convenience of doing that, Walmart is going to charge you a fee. Maybe it's a percentage, maybe it's $5, maybe it's $3. Either way, it's a fee. That's essentially what a money order is. I think they had more utility in the olden times when we ordered things by mail. Right, Mike? And
It's the olden times for me, sir. And we are not that old.
We're just gonna leave it alone, Joe. Just gonna leave it alone.
So bullet point 3. So nowadays, electronic banking is so much more convenient and fast. That's the key to a modern financial existence, I think, is having an electronic banking services. Your bank or credit union can provide that for you. ATMs came out of the 80s. That was a new thing. Now they're pretty ubiquitous. We can go to almost any street corner and find an ATM. However, part of being financially literate is knowing which ATMs will be free for you to use and which won't be. Money transfers. So banks and credit unions can help you facilitate money transfers, both internally, so between your accounts, and externally. So they can help you send money to any other bank or credit union most times. Debit cards. I would say, are mandatory issue with a checking account nowadays. That's not to say you can't get by without a debit card, but I would say most folks have a debit card now. Stored value cards are sort of like a Visa gift card. That's what they're thinking of there. And then loans. So loans, in terms of how a bank or a credit union makes money, that's the most important part for them. But for us as consumers, loans can help us obtain things when we need them. I think of home loans and car loans as probably the most important types of loans you can get. A home loan, certainly. Average home in Kalamazoo right now is north of $200,000. Almost, I would wager that none of us have $200,000 in the bank. So oftentimes we're going to need a loan for that. So going to our financial institutions for that loan is a very valuable service that they offer. Okay, here are some key employees to know when you go into your bank or your credit union. Oftentimes, the first person that you would run into is the teller over here. So the bank teller is someone who helps you facilitate transactions, receives or takes your deposits, gives you cash if you need it. Yeah, just awesome. My favorite job in the bank. I started as a bank teller 23 years ago, and it's a fun and fantastic job. So if you are a young person and you're looking for a job that's fun, being a bank teller is a great way, a great foot in the door at any financial institution. I guess maybe in order of how you might be promoted, a customer service representative is also someone that you might find at a bank or a credit union. This is generally someone who probably doesn't handle cash or deposits, but more so helps with questions or problems or loans. Here we have this stern looking fellow is a loan officer. Loan officers generally help you obtain loans. A mortgage loan officer is probably one of the most common types, and that would be a loan officer who really specializes in home loans. Again, this is another reason why it's really valuable to have a relationship, a personal relationship with your bank or credit union. I often say, like, you know, when I go to my doctor, even though I have a relationship with her, I don't go and know exactly what's wrong with me or what drugs she might prescribe to fix that. I'm going somewhere with this, I promise. My mortgage loan officer or my banker could be very much the same. So I may know that I want to buy a house. I know that I want to buy a house this year because I have to. But that's all I know. I don't know how much it's going to cost. I don't know how much I can afford. I have no idea what my credit score is. I don't know what my monthly payment would be. That's what a mortgage loan officer is designed to do. That's what a mortgage loan officer will help me decide. Hopefully that makes sense. So a loan officer can apply to both homes, but also to cars, credit cards, unsecured loans, all types. And then lastly, we've got the branch manager. So oftentimes when you go to a bank or a credit union, they call that a branch or a banking center or a financial center. I think there's a couple of other terms. But there's always someone who's in charge, and they call that person oftentimes the branch manager. Okay. Some key things to remember. Just ask questions. Ask questions until you completely understand. So when you go to a bank or a credit union and you establish that first relationship, or even if it's the 10th time you're talking to that person, make sure that you don't get up from that chair until you understand completely what it is that's been done either to your account or to the loan that you're taking out or the deposit that you're making, whatever. You should understand it. Never sign anything until you understand it. And then always ask for written information to take home for review. Okay. All right, I will pause. Do we have any questions? Either from Facebook or Takesha or Mike?
So it's been shared about 6 times, and I cannot access all of the shares to see if there are any questions. So there's no questions on our main live
Okay.
as of yet. But I do have another question. So when we talk about loans, yes, loans. So most banks that I've gone to have a specific loan officer when we're talking about business versus personal. Now, with personal, I'm gonna just say I've tried a lot of products on the loan side in regards to like what's available, home equity, personal, all of those things. But when you deal with the banking system on the business level, how different is that than like the personal? I don't know if we have anything that we talk about when we talk about like scoring or how you become eligible for particular loans, but how different is that application process for business than it is for personal?
Yeah. Well, Takesha, you've jumped light years from banking basics to business banking, straight into commercial banking.
Well,
Here, and Mike, please feel free to jump in here. Here's what I would say.
You want me to jump in, Joe?
Sure. Yeah.
All right. So to answer your question, Takesha, really you have to think about the different levels of business. And so we're going to use the sole proprietor as an example, as a basis here. And when you think of a sole proprietor, that individual is their own business. So when you go into a financial institution, they're going to look at 2 things. Number one, they're going to look at that individual and how they are handling their credit and their financial life. in what that looks like and going through the scoring of how you get a personal credit score. And I know we'll talk about that in later segments of the sessions. And then also then they're going to look at your business and how you're conducting yourself in your business. And what they do is they determine what they believe is amount that you can borrow based on being able to have free cash flow, meaning they now did, if you come in and ask for $100,000, but your free cash flow is only going to support $10,000, the bank would be setting you up for failure because your interest and principal payments would be so large that you would not have any money to live on or run your business with. So it's a very complicated application process because they're going to ask for personal financial information. Then they're going to also ask for business information, looking at the business and the person as a whole entity all together. I tell business owners when they're starting out, yes, our tax rules allow us to do a lot of write-downs, so we never try to show any profitability. But when you're working with the bank wants to see profitability. It's kind of a catch-22. Now we understand writing things off and looking at things and bringing it together in a balance sheet. But some things the bank can't question. And I'll give you a story real quick. I had a small business owner come in, ask for a loan. We gathered all the information. We came back and we said, unfortunately, what you're asking for does not fit within your global financial picture. Then he went, oh, wait, I have a second set of books here. Will that help? And of course, that was a red flag and the bank could no longer move forward. So it's important that you keep great records and what you report on your financial paperwork to a bank is the same thing that you report to the IRS. Just a quick story, and it's kind of long, but hopefully that answered your question, Takesha.
What I noticed, what I
Yes,
heard
it
in there,
did.
Mike.
I'm sorry.
No, Takesha, you go ahead.
Yes, we did, and we have a question in the chat.
I see that. Which one is best for home loan, bank or credit union, Joe?
Well, I work at a bank, so obviously a bank. But no, the answer is they're going to be very similar. And again, part of being financially literate is having the confidence to shop around so the reality is most banks and credit unions will end up selling your mortgage to the secondary market, to Fannie and Freddie. So you are very likely to get a very similar rate for a home loan at both a bank or a credit union. I would say it's infinitely more important to trust and enjoy, if that's possible, the person that you're working with. I would ask your friends who they used for a lender for their home loan. And if they had a great experience, then I would probably go there first. If you don't have any references at all, there's a lot of people who will give you suggestions on this call. I bet Takesha knows some folks at Home Loans. Facebook is great for recommendations. I will confidently recommend my bank. I bet Mike has a great contact at his bank.
Mm-hmm. Absolutely. And Joe is exactly right. I tell everybody that's looking at a home loan to shop and then understand the product that's being recommended to you to make sure it is a good fit. Because I did have a situation where I had a homeowner coming in, they were going to buy their first home. I explained how we would help them. They explained they went to a competing institution and came back and said, well, can you meet the same thing? I said, well, it doesn't fit. It's not the same thing. It's an apple to an orange. And so they decided to go with the orange. And then they came back and said a year and a half later, the orange did not fit what they were looking to do. And they wanted to try the apple. And unfortunately, they couldn't qualify because in that year and a half, the market was 08 we had a crash. And so they weren't able to get out of a product that did not fit their current financial situation. So it's important to ask questions when you're shopping for a home, in what product they're going to, suggest. They should suggest multiple products for your situation. Yeah, back to you, Joe.
Good answer. Good answer. Does anyone have any other questions?
We got about 3 minutes left till 7.
All right. Well, my favorite thing to hear on these types of calls is, well, I'm going to give you 2 minutes back of your evening, ladies and gentlemen. But seriously, I hope you found some of what we talked about valuable, maybe even all of it. And again, though, if nothing else, remember that being financially literate is extremely important so that we can both take advantage of our financial system and avoid being taken advantage of. And I think one of the most important things we can do is start to have a relationship with our financial institution. All right. And so next week, we will talk about credit and credit scoring, which happens to be my very favorite topic. So tell your friends, and we're only going to charge $100 a ticket next time.
Well, I thank you so much for being here and for committing to helping us get financial literacy out into the community by any means necessary. I hope that those who have watched tonight have gained some additional information. As much as I use the bank, I feel like I learned a little something here too. Thank you both. And we will see you all next week. Same time, same channel. Have a great day, and thank you.